Hey guys, welcome back to the Covered Caller. We cover these option-based high-yield ETFs and closed-end funds on this channel. Today is our weekly top 20 countdown, although today we're going to do the top 30. Our list is growing and it's not good enough to just show the top 20. Stick around for the top 30 countdown coming up next. Now let's talk about the Maxfactor. The Maxfactor is my own metric that I use that's a better metric to determine the risk-adjusted reward of these high-yield funds, in my opinion. The high-yield funds really broke the total return metric. And my metric, the Maxfactor, is a better metric than total return. In my opinion, not financial advice. And speaking of that, remember, none of this that you hear on the channel is financial advice. Consult a professional advisor, please. All right, so let's get this show started. Number 30. Number 30 is SPIN, S-P-I-N. This is from State Street. This is the S&P Premium Income Fund. Look at the price 90 days ago. $30.21. The price the other day was $32.11. That's almost $2. Doesn't sound like that much, but that's 8% over a quarter. It's like 30% a year, something like that, 35% a year, if it stays at that rate. And over here is the stable dex. This is a 1.08. The stable dex is indexed to the market as a whole, and 1 is market stability. So a number more than 1 is more than market stability. Less than 1 is less. So SPIN is based on the S&P, and it's a little bit more stable than the broader market. At least it has been lately. Number 29, YieldGold. All right, this is the first of many, I would suspect, gold and silver-based and oil-based funds we're going to see on this list. In any event, YieldGold's price has moved from 43 to 52, 43.5 to 52.5. Basically, that's good for 24%. And they're paying a 13% yield. Not too shabby. Now, it should be said that this fund is not very stable. It's only about 20% as stable as the broad market. Next on the list is SCHD. Wow, this thing hasn't been on the list in forever. This is a not really a high yield fund. It only yields 3.3%, but it is, I thought it was, so many people have this fund that I thought it was worth comparing. So it is part of the factor. The factor normally requires a 5% yield or above to become a high yield fund. Well, in any event, this one not yielding very much. Obviously, the NAV's pretty solid this quarter, being a 16% total return. Let's go to number 27. Number 27 is NDIV. Now let's get out old FinViz and check out a little NDIV. This is the Amplify Energy and Natural Resources Covered Call ETF. Okay, boy, you can see this thing took off right around the first of this year and just has not looked back since. Energy, natural resources are another theme I suspect we're going to see a lot on this list today. Next on the list is RIV, the River North Opportunities Fund. This is, let's look at this one. This is a closed-end fund. It pays monthly, pays a pretty generous around 10, 12% yield. Has good-looking NAV performance. This chart right here is of the NAV alone, not even including the dividend, which is monthly. You can see it paid 12.8 cents a couple of months ago, 13 cents the month before that, and last month, or this most recent time, it paid 13.1. Nice job. All right, let's see who's after the River North Opportunities Fund, and we have JEPI. All right, so JEPI is from JP Morgan. This thing's yielding 7.91%. NAV's gone from 57 and change to darn near 60, which is 6.7%. Not too shabby when you combine it with a nearly 8% yield. Not to mention, look how stable this thing is. This is 79% more stable than the broad market. At least it has been. We're focusing mainly on the last quarter in this metric, but this one is a bastion of stability, a beacon of stability. Let's go for number 24. Number 24 is FAX. This one is a closed-end fund. This one is the, I forgot, gosh, oh, the Aberdeen Asia Pacific. Oh my gosh, I should have known that one. We just had the closed-end fund Thursday night show, and this one was featured prominently on that show. So once a week, in case you guys are new here, once a week we do the top 30 reveal like we're doing now, top 20 reveal, whatever. And then, but on every night, we have different daily factor shows where we drill down into a subset. And Thursday nights are generally closed-end funds. So if you like closed-end funds, show up on Thursdays. All right, so let's see who is next. Next, we have ASGI, another closed-end fund. Doesn't yield quite as much as FAX. It only yields about 10%. NAV's gone from 22 to 25. No erosion here. Now that's a NAV at plus 17%. That's only half as stable as the broad market, but I mean, it does pay like the broad market pays a 1.5% yield. The SPY pays what, 1.5%. So, you know, this has to take a little bit more risk, and you can see it. Not all of these do have to take more risk to outperform the SPY on a total yield basis. Like JEPI performs about 4 or 5 times better than the SPY on a total return basis and does it taking less risk. All right, number 22 is IAUI. This is from NEOS. This is based on gold and silver. This thing's yielding 10.8%. It's gone from 55.5 to darn near 64. That's a 17% increase in the NAV quarter over quarter. Not super stable, but you know, we can excuse it since the NAV's going up so much. Like I always remind folks, you don't want to be stable on the way up. On the way up, a volatile fund helps you because it's volatile in the direction of the market. But you know, the opposite holds true on the way down. And since we don't know what's happening in advance, sometimes it is nice to try to focus on stability a little bit. At least make it a factor in your decision-making process, right? All right. Next one is SOXY, paying 9.4% yield, and it has a 22% NAV return. This is our second best NAV return yet. It's not doing quite as well as YGold. Now, these are semiconductors. Now, semiconductors are the new gold, I guess. I mean, semiconductors have been hot lately. All right, number 20 is USOI. Speaking of something that's been hot lately, this one's based on oil. USO, I just checked on Weekend Wall Street, and oil is trading up about 8 or 9% at this hour overseas. Now, the American markets don't open again until Sunday night, but if that's any indication, I would imagine the American oil market opens higher. And I would imagine if that sustains until Monday, that these high yield funds will also open higher. So I'd expect a good day on Monday for USOI. All right, number 19 is GLDI, also based on gold. This one is yielding 17.7%, and it has about 9.5% NAV return for the quarter, and it has market stability. Now, that's impressive because it's based on gold, and the last gold one we had was IAUI, and that one has been quite a bit more volatile than Gold I. IAUI only has about half of market stability. Now, to be fair, like I said, stability goes both ways. It's actually helped IAUI out lately. If you look at IAUI's NAV, it's almost double the performance of GLDI's NAV. So at GLDI, you get a little bit more yield, but a little bit more NAV safety. IAUI gives you a little bit less yield, but it's a little more aggressive as far as catching NAV upside. It all depends on how these guys structure the options, how far out of the money they put them, how often they roll them, what tenor they use. Tenor mean when they expire. They expire next week, they expire tomorrow, next year, next quarter. When do they expire? All right, so let's go to the next one. Number 18 is MDST. Now let's look at this one. This one is the Westwood Salient Enhanced Midstream Income ETF. Boy, this thing's doing a good job. And as you can see, it took off right at the first of the year with all these other oil and natural resource plays. All right, let's go to number 17. Number 17 is KSIL. Now, I have this one myself. I've been real happy with it. I'm in it at like 27 or 28, and it's trading at 45. And I've been dripping, so I've been getting more shares along the way. And this one is my best performer in my high yield portfolio. And look, the last quarter, the NAV's up 56%. So you may say, why does this one not rank higher? I mean, NAV's up 56% and it's paying a 16% yield. What more could you want? Well, what more you could want is some stability. And this thing's only an 11 on the stable dex. That's going to be our lowest stability ranking of the day, meaning it's about 9 times more dangerous or moves around more, let's just say, than the market as a whole. So this one is a heck of a ride. All right, let's go to number 16. Number 16 is XLBI. This one's yielding 13.64%. NAV's up 10%. Now, this is from State Street, and this is based on materials. So this is, and by materials, let's go here. State Street's materials select Spectre Spider Premium Income. So they sell options on the State Street Materials sector fund. And but this one, they sell options. They pull off about an 8% yield for you, and it doesn't seem to impede the upside that much. NAV's still been rallying despite the good yield, so that is good. Number 15 is Chippy, CHPI. Now this one's yielding 36.5%. NAV's gone from 56 to 59, so that's 14%. We'll take that. It's about half as stable as the broader market, but it's based on microchips, semiconductors, those types of stocks. So, and it pays a 36% yield. So you're probably going to have to take a little bit of volatility when you step out and try to get 30, 40, 50, 80% yield. That's usually the case. Let's go to number 14. Number 14 is HDLB. Now this thing yields 10%. NAV's gone from 15 to 18 and change. So that's about a 24% face ripper. We don't have a stable dex on that one. I'm sorry about that. I need to work on that. Let's go to number 13. Next one we have is BCAT, Capital Allocation Trust. Now we talked about this one on the factor last night, yielding about 21%. This is from BlackRock, and it has a sister fund called ECAT. They're doing similar. BCAT's doing a little better. We compared them with each other last night. You can see this one's had good yield. Or a good NAV, pays monthly dividends. Not too shabby, making about 21%. All right, let's see who's next. NIHI. Wow, okay, let's go look at NIHI. Now, this one is one I'm interested in myself. Thinking about adding it on the next rebalance period. And I usually rebalance my high yield fund about once a quarter, and it's coming up again. In fact, it's due again. It's due again now, basically. Well, in any event, this is the NEOS MSCI EAFE High Income ETF. What they do is they hold this fund right here. They hold the iShares Core MS, whatever this EAFE ETF, and they sell options on it. Anyway, they've been doing a pretty dang good job lately, right? All right, let's go to number 11. DOGG. Okay, this one right here, yielding about 8%. NAV's gone from just over 21 to just over 23. That's not too bad. 13% NAV upside. Stability all day long. It's a 130 on the stable dex. The last one was a 149 on the stable dex, meaning it's almost 50% more stable than the broad market. That NIHI has been good, but so has DOG. And you can see right here, they're ranked right close to each other, and they're very similar. Look at NIHI compared to DOG. Well, DOG's comprised of American value stocks, but nonetheless, and NIHI's foreign stocks, but nonetheless, NIHI paid a little bit higher yield. Well, Dog had about the same proportion in higher income, and they're both ranked similarly as far as stability goes. Dog's 30% more stable than the broad market. NIHI is 49%. All right, number 10 is SLJI. This is based on junior silver miners. This one's yielding 14.8%, and the NAV is up 43% this quarter alone. Wow. Of course, these precious metals are on fire, but like I say, the ones that oftentimes have really good NAV performance or super high yield, 50, 90%, you're almost always going to have to take on a little bit more risk. And the stable dex is only a 19, meaning it's about a fifth as stable as the broad market. Number 9 is WEEI. This is our second one from Westwood. We also had MDST from Westwood. That's the Westwood midstream salient something. Anyway, WEEI. Let's just pull this up. This is the Westwood Energy Infrastructure. It's the Westwood Salient Enhanced Energy. And you can see just kind of the theme here, just took off at the first of the year and hasn't looked back. But really, this thing was kind of drifting up all year and then just recently broke out from the drift up. That is a good one as well. Number 8, KOLD. All right, I have some of this one myself. Only yields 8.3, but look at the NAV upside. It's plus 55 on the NAV upside. That's our second highest NAV upside, right behind KSILV. So obviously both are impressive. One's based on gold, one's based on silver. Both are from Kurv. The portfolio manager and founder has been on the station many times, Howard Chan. He was on the Christmas special. He's a good guy, and has a reputation as being one of the more conservative managers in this space. And his funds do a pretty nice job. A lot of people are really happy with them, me included. I have KGold, I have KSILV, and I have one called KYield, KYLD. Now, KYield isn't going to make this list, but hopefully it will someday. All right, so let's go to number 7. It's not going to make this list tonight, but hopefully it will soon. It's been lagging a little bit. All right, number 7, XLEI. So this is from State Street, and this is based on the XLI, which is, well, let's just look at it. But that's State Street's industrial ETF. So State Street's equivalent of the Dow Industrials, kind of. So, and they sell options on the XLI. So let's look at the XLI, and I'll show you what's in it. John Deere, Caterpillar, those kinds of things. GE, Boeing, Union Pacific, Uber, Honeywell, Eaton. You guys get the picture on that one. And this thing is taken off at the first of the year, broke out, but it was going up all last year too. This thing is incredible. All right. Number 6 is GDXY. All right. This thing, the NAV's gone from 16.5 to 18.5. That's about a 46% yield. Wow. Now, this is based on gold, but it's based on gold miners, which is an ETF called the GDX. This fund is from YieldMax. It sells covered calls on the synthetic covered call spreads on the GDX. Doing a nice job lately. The GDX has been on fire, as has gold, silver, and other materials and precious metals and stuff like that. They've all been on fire. The whole sector's on fire. Number 5 is XLEI. Wow, State Street is dominating. Now, this is State Street, and this is based on the XLE, which is State Street's energy fund. So this is the XLEI. They sell synthetic covered call spreads on the State Street energy-based fund. So this fund's going to have things like Exxon and Chevron and that kind of stuff in it. In any event, that's been a hot business lately, paying about a 17% yield, 10% NAV upside, and market stability, a little bit more than market stability. That one is a good-looking fund right there. That has some good metrics. That maybe I need to consider that one in my next rebalance. That one looks really impressive. All right, number 4. XOMO. Now, this is from YieldMax. It's based on a single stock, ExxonMobil. It sells synthetic covered call spreads on ExxonMobil. Well, in any event, it's getting about 30% yield, and it's got 21% NAV upside for this quarter. Now, you guys might have heard before the covered call strategies are capped. And in the old days, they used to be before funds came out with the covered call spread strategy. And covered call spread strategy is a method of partially uncapping your upside and not being totally capped. Well, in any event, you still need the underlying asset to go up, but ExxonMobil has been going up. This option strategy has been able to earn a yield at the rate of about 30% and catch plenty of upside at 21%. Now, it's about half as stable as the broad market. That's not too bad considering it's based on one stock and not an index. All right, number 3, we're getting up here into the rarefied air, aren't we? Number 3 is, oh my gosh, you got to be kidding me. Where did this one come from? Marnie. Now, this is a YieldMax fund, sells synthetic covered calls on Moderna. Well, past couple years, the synthetic covered call business on Moderna has been a loser. I mean, it made some yield, but I mean, the NAV part of it has been a big loser. Well, Moderna's turned around recently, and my metric, the Maxfactor, is sensitive. It also considers momentum. It considers momentum, volatility, NAV, and yield. Okay, and it doesn't even consider total return because that's deceptive. But it considers NAV separately, yield separately, momentum, and stability. In any event, you throw all those together and you mix it up, and this thing's yielding 25% lately with 51% NAV upside. Not super stable. It's based on one stock, and it's you wouldn't want to make this one a core holding or anything, but my Lord, this thing has been really impressive lately. All right, we're getting into the really thin air. It's hard to breathe up here. Number 2 is USOI. Okay, now this one is from Defiance, actually. This is based on the USO, which is based on U.S. oil futures. So these guys actually don't sell synthetic covered calls. Defiance has the same sub-advisor as YieldMax, but this is a different strategy where these guys are writing puts. They write slightly in the money puts. A lot of people don't realize that, but a naked put has the same profit and loss, same downside, same upside, same everything, or a cash secured put, whatever you want to call it. Same risk, same reward as a covered call. It's just another way to do a covered call. It's a way to do a covered call if you don't own the stock. So what these guys do is they use most of their money to buy T-bills and stuff, and they only need a fraction of their money to sell puts on the index. Well, in any event, the yield off the puts caused by the time decay generates this yield. The yields generate about 87.5% this quarter. Now, it's important, like I always say, the underlying asset still has to go up. USO has been going up because it's based on oil. And this strategy, which sells in the money cash secured puts, has been able to catch about 27.2% upside. That's really good. The USO caught more upside than the ExxonMobil strategy, and had a higher yield, and it was a little bit safer. So I think it's pretty easy to see why it's ranked ahead of XOMO. All right, number 1. Who do you guys think it is? I already know, so I can't tell, but let's just hit next. Oh, boom, there it is. TSMY. Nice job. This thing yields 51%. It's based on Taiwan Semiconductor. It's from YieldMax. NAV's gone from 15.5 to just over 17, but it still does pretty well, and it's very good on stability also. So that is our list this week. All right, well, be back later on tonight, and I'm going to have a Daily Factor show. And tonight on the Daily Factor show, we're going to get in the middle of some of these tickers, and we're going to examine them further, and we're going to look at some other metrics and some other things that I think are interesting. But I find this really helpful. I hope you guys do too. I follow more than 300 of these high yield ETFs now, and I'm adding more every day. The reason I did this is for myself. It's not to make content. I'm unable to keep up with 300 stocks. Sometimes a high yield ETF will start doing bad. Sometimes one will start doing well. I follow, 5 or 10 every day. And it's the ones I talk about all the times. You guys know which ones those are. Blocks, K Yield, K Silv, K Gold, ULTY, QLDY, and those are kind of my core holdings. So heck yes, I follow those. I follow WPay. I follow the Roundhill funds, and some of the ones I'm interested in. I don't have time to follow all these. So I hope this list helps you out as much as me. What I know, my favorite thing that I noticed off this list today was XLEI. I did not realize how well that one's doing. USOY might be a good alternative also, but on my next rebalance, those, I'm looking towards possibly a closed-end fund or maybe one of these State Street funds, maybe some of both, but this list helps inform my own decisions. Now, remember, it's not financial advice. I'm not a financial planner. I'm not qualified to give you financial advice, but I hope you find this helpful in any event. Use this for research, and then ask your planner, before you execute anything, ask your planner. All right, guys. Well, I appreciate y'all for being here. I'm going to get out of here and take Jax for a jog, but I'll be back tonight with the Daily Factor Show, and we're going to get in the middle of this, and we'll do a deep dive on some of these. All right, guys. Thank you so much. Remember, not financial advice. Consult a professional advisor. If you'd like to support the station, you may do so, and I'd appreciate it at paypal.me/Max Convexity. Thank you so much. Have a good afternoon.